Good evening, good morning, good afternoon, everyone, wherever you're watching or listening to us from. Welcome to Stocker Team, the investors channel. Today, the 18th of February 2025. The market actually reopened today. The After the public holiday, trading activity is back in full force today, Tuesday, on Wall Street. Before we start on the topic I have for today, let's just do a very short disclaimer. Every information shared on this channel is for education purpose only, so do not take any decision unless you've spoken to your financial advisor or you've done your due diligence. On that note, thank you so much for being a part of this channel, for subscribing, putting on your notification bell. If you haven't subscribed to this channel, please subscribe to our channel, put on the notification bell. Please also join our Stocker Team Live community on X, Stocker Team Live community on X. That's where we bring you all the breaking news, all the tips, and even stock picks before we even bring it to the channel to talk about it. Sometimes we even talk about some of these stocks. So today I'll be talking about trending stocks, and I have two stocks to discuss. I haven't bought these stocks for reasons known to myself, but I'm going to also disclose the reasons behind my decision not to buy these stocks for now. So there are two stocks out of many stocks that are actually trending. And when I mean trending stocks, these are stocks that a whole lot of people are talking about. A whole lot of people are talking, looking to buy. Some are looking to sell or even short sell. Bet that these stocks will go down. Some are looking to even long part of the trade, betting that these stocks will go up, while some other people are looking at these stocks as some of the stocks that might actually go viral and shoot up in valuation, just like what happened to Nvidia, in the last 1 year, just like what happened to Palantir in the last 1 year or so. So two stocks today that I'll be talking about, they are not on our watch list, they are not on our buy list. The decision is up to yourself to buy or sell. But I'm going to be bringing you what I think about these two stocks. So come with me. So the first stock I'll be talking about, the first out of the two stocks I'll be talking about today, trending stocks, is Grab Holdings. Grab Holdings is actually has been trending for the last 3 days. Even during the public holiday yesterday in the US, it was actually trending across all the major platforms where people talk about stocks, from X to Reddit, to even some other platforms, even StockTwits, for some of us who know StockTwits. So Grab Holdings is a Southeast Asian technology company. The company provides ride-hailing, food delivery, digital payment, financial services. It was actually a taxi booking app in Malaysia. They started as a taxi booking app in Malaysia, but they've actually expanded into so many things. Like I've said, they are now more or less, projecting themselves as a super app in Southeast Asia. They offer different services: mobility, grocery, insurance, lending. They operate across Southeast Asia, Singapore, Indonesia, Vietnam, Thailand. They are also competing with a company called Gojek in that region. Now, what do I think about Grab Holdings? Grab Holdings actually came up with a better result than expected. I'm going to be showing you what I think about Grab Holdings, whether it's a buy or is a hold. But I'm not buying the stock for one reason. I own Uber Technologies. Uber is the biggest player in this ecosystem that Grab actually plays in. Grab is not a global business, it's a regional business. They are based in Southeast Asia. They might be expanding very soon, but I don't see them actually, constituting a major competition to Uber, even on a global level. But if you look at the kind of business they are running, they seem very serious and determined to actually build a very good business within that region. So if you look at what this stock is actually doing today, about 7%, over 7%, almost 8%. In the last 6 months, if you follow the chart with me, the stock has actually done over 64%. in the last 6 months. In the last 1 year, the stock has done about 46% in the last 1 year. But if you trend it back the last 5 years, since this company was actually listed on the stock market, you can actually see that the stock is down by about 55%. So what does this mean? It means that for a whole while, when the stock was actually coming into the market, it wasn't doing good numbers in terms of not the stock as a security now, but the company wasn't doing much in terms of revenue. Also, in terms of the losses they've been reporting, the losses were actually going up. So as at that time when inflation was actually on the rise, a whole lot of companies that are not making profit, and they are also spending a lot of money to borrow to run the business, many of them actually lost their share price. So I reckon that why the stock is still down today at 55% is because of all of these so many years that it's been very tough running companies that are not profitable in an inflation environment, or global inflation environment that is very, very volatile. But what do I think? I think Grab Holdings will be able to build a very good business in that region. I also think in the nearest future, Grab Holdings might actually be acquired, maybe by Uber or maybe another player out of Europe. So if you look at Bolt, which is a European and African ride-hailing company, they are not as big as Uber, but they might actually merge or acquire Grab, and they might actually use the opportunity to have that global feel. But as a stock, if you don't own Uber and you think you want to bet on a company that might actually do well over time, you can actually look at Grab Holdings. What attracted me to this stock to discuss it is because of the huge number of chatter over the weekend and also yesterday before the market opened today. A whole lot of people actually are excited about this company. For me, it's a buy for anyone who has missed Uber, or anyone who think this company might be acquired in the next couple of years. But bear in mind, this company is not making profit yet. It's still a loss-making company on a full-year basis. So you might still have some rough ride down the line. But in terms of their losses is actually coming down aggressively. So let's move to the next and the last stock for today. So the second trading stock I'll be talking about, this stock has actually been trending for a while, at least in the last 6 months, when the AI boom, the AI hype, and also a whole lot of companies who were actually proving that they can make money from AI. Big Bear AI is actually a data analytics and artificial intelligence company. The company specializes in predictive analytics, machine learning, decision intelligence for government and commercial clients. They also have customers in military, defense, logistics, healthcare. They basically claim, or the company helps companies or organizations to make strategic decisions. They are able to analyze large data sets and simulate potential outcomes. Now, that is a whole lot of big buzzwords and also some very specific information about this company. But between you and I, this stock is one of the most very popular stock in the last 1 year. If you can see, since the AI boom, if you just follow my chart, you can see that this stock is now up by over 273%. So for those who bought this stock, in early $3 per share and all that, they are now up by a whole lot. However, a note of caution. Yes, this stock is down today by 6%. No major particular news, but this company is a very, very leveraged company. What do I mean? They actually have been making huge losses, and the loss of this company keeps going up. the losses keep piling up. So even if a company is not making a profit yet, there should be a pathway to profitability so that you are actually assured that even if you are going to wait it out for the next 2 to 3 years for the company to break even and start declaring profit. Because when a company is declaring profit, it means the company is healthy. It means the company will borrow less, or rely on debt to actually run the business. It means the company is getting out of the probability of filing for bankruptcy, which might wipe you out as a shareholder. So profitability matters. However, even if you're not profitable as a company, you need to actually show that pathway. But Big Bear AI, they are not necessarily showing that. I'm going to show you the last balance sheet. So looking at this balance sheet, Big Bear AI, in the last 9 months ended September 30, 2024. If you look at, just follow my mouse. If you look at this, the loss that the company actually declared. Yes, so here the company declared a loss of about 149 million dollars, as opposed to a loss of 39 million dollars they declared same period in 2023. It's not really looking good, and because I already have Palantir, if you look at what this company said they are doing, is exactly what Palantir is doing. And I've actually looked at their revenue. Their revenue is not quite impressive at all. They don't necessarily show that they are one of the leaders in that industry. Their total revenue for September 30, 9 months ending 2024, is just $114 million dollars. If you even look at what they did in 2023, they were even doing a little bit better in 2023 than they did in 2024 as at that time. So, and this was when AI was actually very hot. So yes, a whole lot of people will get rich buying this stock. For me, it is thanks but no thanks. I'm not sure I will be buying this stock at all. The challenge with this kind of stock is that because the AI hype is still very much hot now, many of these stocks will do very well. But if there is a negative news, especially funny enough, just like the DeepSeek AI news that came out 2-3 weeks ago that tanked even the almighty Nvidia, is if there's another negative news that shows that the AI hype is getting too much and a lot of companies are not showing the result, this kind of stocks, the likes of Big Bear AI, will be the first few companies to be wiped out, and some of these stocks can lose up to about 70-80% of their market value within a twinkle of an eye. So you have to be very, very careful as an investor. Will you make money buying this stock? Yes, you can, but if you are actually having it as a trade that you want to get in over a short, medium to short term, you might be lucky. But for me, that's why I think, based on what I know and based on what I've actually done as per research. So what do you think about Big Bear AI and Grab Holdings? Are you looking to buy both stocks? Are you actually not buying any of these stocks? Please put your comments, your feedback in the comment section below. If you haven't subscribed to our channel, please subscribe, put on your notification bell. Thank you so much for everyone who has been a part of this community. We'll be seeing tomorrow. I have a very interesting topic, another stock pick that I've just taken a position in. I'm not going to say that now because I want to actually build up that suspense so that you actually get ready to see what I have to say tomorrow, so that you also do your research after seeing it. Thank you so much. Till tomorrow when we meet, keep investing, keep growing. Thank you.